Hey, Jack, can you hear me?
Yes, sir. Brad, how are you?
All right, we are on. I'm good. Well, I shouldn't say that. Let me rephrase. So I have a 2-year-old and a 2-month-old.
Right.
And the 2-year-old decided to get up at midnight last night.
Ooh. And
So,
then,
and then there were numerous attempts to put him back to sleep, which did not work. But, I find I can handle that one night, but if it happens multiple nights, I just, it's over.
yeah, dare I say it has a compounding effect. Sorry, I apologize.
No, that is perfect, Jack. That's exactly why I've got you here. Great. Well, who do we have? I think we got investing with Tom. I think that might be the only one at the moment, but that's great. I'm glad he's here.
Same here.
Yeah, let's just dive in. We're talking about Equity Commonwealth today, and I noticed. Have you put out multiple videos about this company before? I know I've seen at least one from you.
Just one about the company in particular. Actually, today I just did one about Sam Zell and his kind of investment principles specifically. I know
Mm,
you and Tom, for example, like to do a lot about a lot of the great stock value
that's
investors.
right.
I do something about Sam Zell as well, since he is another prolific investor, just obviously leans more towards real estate. So
Yeah. Cool. So that's kind of what Sam Zell has bought in the past, or is that what the video is about?
a little bit more just
Yeah,
about his general trends because he's got a 50-year track record of
sure.
mostly real estate investing, but he has quite a few other ventures as well.
Yeah.
Um, but just kind of the principles that he sort of lives by when he's investing. Since
Uh-huh.
now I'm investing into one of his REITs, just as full disclosure, I am invested in Equity Commonwealth at the
Uh-huh.
moment. Might change that position, we'll see. But I wanted to kind of get more into his sort of investment philosophy
Sure.
since he's running the show ultimately.
Yeah. Great. Um, yeah, well, so let's give a quick overview of, what is Equity Commonwealth and what has their journey been. It looks like something happened. Was it 2017 or 2018 where they changed their name? What was that about? You
I,
aware of
I
that?
I'm not 100% certain, but I
Yeah,
think it was just to bring it under this equity uh, umbrella name, since all of Sam Zell's REITs, I believe all of them, have equity at the front. So it just
I
brought it
see.
into the equity group. I
The
think that's all it
brand.
was.
Yeah.
Yeah, branding. That's the word.
Okay, sure. So this is a real estate investment trust that focuses on office real estate.
That's right.
And it sounds like they had quite a portfolio a number of years ago, more than 100 uh, assets. Is that right?
Yeah, over the past 6 years now, they've sold something like 160, 165
Wow.
properties, and they are only left with four. So it's been a large scale sell off of mostly office buildings, and they're left with four office buildings now.
Yep. And they look like fairly substantial office buildings
Right.
based on the images, and in pretty prime real estate locations.
Yeah.
Yeah. Um,
And those, if I recall the locations exactly, it's DC. Um, they have two in Austin and then one in Denver, and they're all Class A, large
hmm,
scale office buildings, which obviously is seeing a bit of a rough spot right here in this odd pandemic induced market. So we'll certainly be talking about that.
that's right. So, going from 160 plus properties to four over a handful of years, um, are you aware what is their end game? Are you familiar with that? What are they going for here with all of these
I think the
asset
ultimate
sales?
goal,
Hmm.
when when the Sam Zell's group initially came in to Equity Commonwealth, it had a lot of debt, and clearly some fairly substantial office assets and some high quality ones at that. However, Sam Zell has always been one who values liquidity.
Hmm.
He does not like to over leverage himself, and if he can get a good price for a building, he will sell it. He's not afraid to sell. That's one thing that makes him kind of unique, I suppose, in that he almost sells too early as opposed to too late, which
Uh-huh.
I'd take that almost every time because he likes to be in the position to where he can, when a crisis does eventually hit, he has plenty of liquidity to go after those distress deals and work out those problems. That's his specialty.
Hmm.
He he donned himself the grave dancer, and the industry has adopted that nickname for him. In that he kind of dances around the grave in a loving way, I suppose, of distressed assets or distressed companies, and then we'll come in and work out some solution and give that asset new life in a way. That's sort of his shtick, and has a pretty substantial track record of doing that. So I think that was what the ultimate goal with Equity Commonwealth was. He had a lot of office buildings. Sam Zell is kind of an office specialist. That he built one of the first large-scale office REITs that he eventually sold to Blackstone in 2007. Again, selling at the right time. And I think he just wanted to get out of potentially overpriced assets while he could, and take care of the debt problems that Equity Commonwealth had. And now they have no debt.
That's right. Yeah, it's a beautiful thing. Their balance sheet is looking pretty clean.
Yep.
So I was trying to get a sense for, how the cash and the real estate compared to the current price of equity. So I did a little digging yesterday. Looks like they have about 122 million shares outstanding for the common. And then they have preferred shares as well. Cumulative redeemable shares, I think that's what I saw, of 4.9 million. And so the total equity value I came up with was about 3.37 billion for those two different classes. It looks like they paid a pretty hefty special dividend recently, back in, I think it was October.
Yeah.
Like 400 million they paid out. So right now they have cash of 3 billion. And just trying to do a little wrapping my head around the value of those four properties. So I was digging into some of the net operating income figures on their last quarterly release. And I was trying to get a sense for what is the best way to normalize that, because obviously two of those quarters, the second and third quarter, we've been in the midst of this pandemic, right? And then the two quarters before that, the numbers were a little higher. So essentially what I did for the NOI is I looked at the second quarter and third quarter and just multiplied it by 2. I kind of extrapolated it out.
Sure.
And I came up with somewhere around 40 million NOI.
That's what I've been assuming as well.
40 million, okay.
They had, I think, some lease termination fees in the most recent quarter, which kind of bumped it up artificially.
Exactly.
But their occupancy is still pretty high at around, I think it was 88% across the board. So not too terrible at the moment, considering how some office buildings are really, really suffering. I think being in Austin and just being in Texas in general might help that. I don't know. Being such a small portfolio with only 4 properties, it's they're subject to more local market considerations, as opposed to having like a huge portfolio where one market swing will affect pretty much everything. But it's so localized that maybe they're kind of insulated in that way.
Yep. And I presume the high occupancy speaks to kind of the premium location of these assets.
Exactly.
And obviously occupancy doesn't necessarily mean there's people in those offices, right?
True. That is a catch.
They're collecting payments for those.
Right.
So that's good.
So the question is how sustainable are those payments if we're into this changing world with office? So that's what remains yet to be seen. That's the risk. I think the largest risk with their current portfolio. Thankfully, it's mitigated with a bunch of cash, but there's a lot of questions there.
Lots of questions. The market doesn't like uncertainty, and this is there's a lot of uncertainty in this one. But there's also a lot of potential upside, right? You've got Sam Zell. You've got all of this cash. You've got a depressed commercial real estate market. Maybe not super depressed yet. I don't know what the current cap rates are for office properties around the country. Do you have any?
Yeah, I took a look. CBRE recently, a couple months ago, released their sort of market survey. They do occasionally. Sam Zell has complained that there's been not a lot of price discovery. So perhaps these are still inflated or inaccurate. But let's see. I wrote it down here. CBRE has Austin and Denver Class A downtown office cap rates at somewhere between a 5.75 and a 6.25 cap.
Wow.
Which is actually up about 0.5% from last year. So you have seen a little bit of cap rate expansion, meaning the properties are worth less compared to their NOIs last year. And then suburban Class A office for Austin, which one of the properties is in the Austin suburbs, has about a 7% cap rate. And then DC office Class A cap rates are between 5.25 and 5.75%, which is about the same as last year. So,
Okay.
so you haven't really seen a ton of cap rate expansion, which would be good in this case, at least for Class A. I didn't look too far in anything after that.
Sure.
These are Class A office buildings, and that's probably where Sam Zell would be staying if he was going to stay in office. We shall see, because he can be pretty nimble.
Right.
But to the cap rate projection, if we're assuming that $40 million per year NOI number, and you take it at about ballpark a 6 cap,
Yep.
you're looking at about a $670 million portfolio, something
That's right.
like that.
Yep.
And if you want to move that up to something like an 8 cap, like a very conservative 8% cap rate,
Yeah.
you're looking at a $500 million portfolio. So I
Okay.
think that's kind of the worst case.
Okay.
So you don't have a huge margin of safety if you're assuming that high of a cap rate. If you're assuming current market cap rates and you're just looking at like the immediate liquidation value, then I'd say 670 is probably the more appropriate number if I had to put my guess on it.
A 6 cap.
Yes.
Okay. Yeah. So, I mean, you got 3 billion cash. You've got, 2/3 of a billion in real estate value. So, at the moment, taking those figures, it's looking like like there's quite a bit of downside protection. Right. Yeah.
I think that's one of the biggest assets, if you can, more conceptual assets here, is that the downside is very much protected because there's no debt.
Right.
The flip side on that is, I was thinking about this since you've covered a lot about Seritage growth properties,
Yeah.
which Brian and many other value investors have gotten into
Mhm.
recently. You can see Seritage is almost the bullish, a real estate stock that will do really, really well in a bull market because it's so leveraged. And
Yeah.
if you get that bull run continuing, which it might, then they have a lot of upside. Whereas with Equity Commonwealth, it's mostly cash, so they're poised to do really well in a downturn because they'll be very liquid to take advantage of distressed assets. But if we don't get a downturn anytime soon, then you're missing out on all that upside that something like a Seritage would have. So
That's
maybe if
right.
you're looking at like a portfolio construction, if you have a little bit of both or that sort of approach to it, you have one that has a lot of downside protection, as with Equity Commonwealth, combined with something that has a lot of upside potential, but not
Mhm.
as much downside protection with Seritage. Could be a nice little diversified real estate portfolio.
Yeah. It's funny. I was just messaging with Karan the last couple of days, another YouTuber who I think we both know. And, he was talking about how amazing would it be if Seritage and Equity Commonwealth partnered, like teamed up, right? Used all of the cash from Equity Commonwealth to, really help develop those, first of all, pay off the debt and help develop
Yeah,
those properties with
yeah.
Seritage.
That's the thing with Seritage. It's going to be expensive to turn retail into other things. And not saying they won't do it, but that's a lot of risk there.
Yeah.
If they can pull it off, you got huge upside. But it's a different kind of risk.
Now, I presume there's nothing in the conversation about converting these office properties into something else, some other use case.
I haven't seen that. Sam Zell has been fairly outspoken about being pretty bullish on office long term.
Mm,
He doesn't believe that the pandemic is going to have too far-reaching consequences, since he's very much into the way he runs his companies. It's very much into the social aspect. He tries to have fun in his offices and create a loose environment, which he
yeah.
doesn't really believe can be sustained if you're just all at home, which is true, but
Yeah.
certainly some companies are going to stay virtual. I think there's no question now. The question is how many, and then which offices are going to be filled after this.
Right.
So, so he does like traditional office,
Okay.
but he's not blindly bullish on it to where he's buying it all up right now.
Right.
However, he and the team, I think they were actually asked about this at their recent earnings call. I have a little excerpt here from David Helfand, their
Uh-huh.
CEO. He's saying that Sam has encouraged us to reconsider all preconceived notions, revisit assumptions, and the like. Since they're not really tied to office, they have a lot of cash and they're a real estate team, and they don't have to buy office properties. So I think, if I'm reading into that correctly, they're open to stuff beyond office. Offices, they're sort of niche right now, but it's only 4 properties compared to 3 billion in cash, and
Right.
they could definitely mix it up if they wanted to, if they find a deal that they like. And
Uh-huh.
that's one thing that Sam Zell is very much into, is a very disciplined approach to
Yeah.
buying and selling.
Right. Yeah. Yeah. I actually first heard about Sam Zell through Monish Pabrai. Pabrai was doing, one of his talks at a business school, and he highly recommended Sam's book, Am I Being
Yeah,
Too Subtle? So
it is a fantastic book, actually. It's a very entertaining story, even if you're not all that interested in real estate. Just an interesting business mind and a
yeah,
funny guy. So
right.
quite recommend.
I actually listened to it on Audible, and Sam did the recording. So that
Oh, that's cool.
he's got, quite a voice.
Yeah, he's a little guy with a very big personality,
Yeah.
and
Yeah,
clearly a strong track record.
definitely. So one of the things I noticed as I was digging in a little bit to Equity Commonwealth, I was looking in Value Investors Club, and I noticed it seems like there's been a write-up every couple of years for the last, 6 or 7 years on Equity Commonwealth and Value Investors Club. And when I see that, one of the things that goes through my mind is, oh, is this a value trap, right? Like every year or two, there's an investor who's looking at this like, oh, this is great, right? There's limited downside, a ton of potential upside, but we haven't really seen that materialize. I wonder if you can kind of speak to that.
Sure. It's gone mostly sideways, and you can't look too closely at just the stock price, because they have paid out a lot of dividends while they've been selling these properties. So shareholders have been getting something back
Right.
that might not be in share price. So you got to keep that in mind. It's not like people are getting hosed. Um,
Yeah.
but it's gone mostly sideways because there hasn't been a ton of growth. It's been mostly cashing out. Um, and because we haven't seen any sort of real market dip until this year, pretty much, and even that I'd hesitate to call it a dip yet, since it's been suspended by lots of backstopping by the Fed
Sure.
and the government, and all that. We all know about that. Especially the commercial mortgage-backed security market, which would be very relevant here. Um, so I guess the reason that it hasn't seen substantial upside yet is simply because they haven't made a lot of new acquisitions and haven't really had much of a chance to solve the problems that Sam Zell and his team would like to solve and create
Mm,
value that way. It's
right.
just they've been kind of waiting, almost sitting on their hands, searching, but because they're so regimented in what they're looking for, that kind of like being a value investor, you got to be very patient. So
Yeah.
if you want to look at it that way, it's they're not being reckless, and that's going to come with probably long periods of not getting huge, ginormous returns that you might see with other stocks.
Yeah. Yep. That makes sense. Since you mentioned dividends, right? We look at like the last 6 years, the price hasn't really done anything.
Right.
Obviously, you can return value to shareholders through dividends. You can do stock buybacks. I don't think they've done much in the way of buybacks.
They've done some, but
Some,
ultimately not a ton.
yeah.
But yeah, you're right.
Um, do you have you looked much into the dividend history in terms of what an investor would have gotten in the way of returns
I
from dividends?
I did not total it up. No.
Yeah.
I know their current yield, technically, if you count that special dividend, is like
Mm,
13%
right.
right now. So you'd get a substantial payout of your initial capital if you bought a while back. Um,
Sure.
I haven't looked past at what exactly the dividend history was past like the last couple of years. Um, Partly because a lot of them were temporary from building sales, and it wasn't consistent income from rent. Because
Sure.
with a REIT, as you know, REITs have to pay out uh, the vast majority of their income at some point that they make through the year in order to keep their special tax status as a REIT.
Yep.
So dividends are going to be a very important part of ultimate investor returns, most likely, unless they're doing, more flip style repositioning a property, selling it, and then paying out investors. If they're
Yep.
doing a more of a rent approach, a lot of that rent's going to go directly back to shareholders, not necessarily into share price.
Gotcha. Cool. So the other red flag I got kind of digging into this was insider ownership. Insider ownership is something I like to look at to see, how aligned are management's incentives with those of shareholders. Um, and I think it's like 0.5% for all of the kind of management team and board members. Um, and then of course Sam Zell, he's the chairman of the board. Uh, I wasn't able to dig into yet what his financial incentive structure is like, but I'm wondering if you can speak to that in terms of, how the incentives of the management team kind of compares to that of common shareholders.
So that's something when you proposed the same question or posed the same question recently when we were first talking about doing
Hmm.
this. And I have been doing some digging, but I really have not found the exact details I'm looking for.
Yeah.
All I know is that the management team has some sort of stock option bonus in
Yeah.
place, and it's set to expire in 2025. And otherwise, they pay out shares that they've reserved off to the side for management based on some sort of metric. I'm not sure what the metric is. It's very much buried
Some
in
kind
the
of
SEC.
performance metric.
Yeah, it's some sort of performance metric, and the shares vest over something like 4 years.
Okay.
So you wouldn't expect like a huge shock, I would think, when they hit a certain benchmark. I just had to figure out what that benchmark exactly is.
Sure.
Um, but also from the kind of management incentive structure, just keep in mind that this is one of Sam Zell's smaller REITs because he has other REITs that are substantially larger. I think so. This one at a current market cap or so of 3.2 to 3.3 billion. Uh, One of his residential REIT, for example, is 21 billion market cap. So it's not necessarily his top priority just by size of the company perspective. So you can keep that in mind.
Right. Right.
However, it's not as though the management team doesn't want it to do well.
Yeah. Okay. And then I was curious about the preferred shares. If you've done any digging into those, I know you've bought some of the common.
Right.
Yeah.
So I think the preferred shares are largely the same in that they're voting shares, just like any other. Unless I'm mixing this up with the shares that they held aside for management. This is also what I was in the middle of this weekend trying to dig
Sure.
for that compensation structure. But
Hmm.
I didn't see any red flags there. But granted, I haven't gone all the way into the weeds yet. It's a process for sure.
Okay. Yeah. Sounds good. And then, it's funny. I did mention SPAC in the title of this live stream, and you pointed out, it's a REIT. It's not a SPAC, but you know, I've been looking at corner of Berkshire and Fairfax, what people are kind of thinking about this company. There's a lot of smart investors there. And, the word SPAC has been thrown around. Like if they only would rename this company to like Sam Zell SPAC or something like that,
Right.
right? It would just pop.
He already
Um,
has a SPAC right now, actually, that he's
mm,
trying to acquire. I think it was a logistical distribution company of some sort, like a tech distribution firm. I think is what he wanted to do.
okay.
So he actually already has a SPAC, so it cannibalize the profits of his other SPAC. I don't know, but it is very much like a SPAC,
Yeah.
considering how much cash it has relative to everything else. It's almost like a SPAC. My kind of general thesis on it now is like if you're buying into Equity Commonwealth right now, it's kind of like you're getting 4 large office properties for free, for lack of a better word, in that the cash and their other assets basically are what you're paying for in the share price. And then
Right.
everything else is kind of a bonus. Not that there's no downside risk, but that's how I'm personally looking at it. You
Yeah.
obviously should do your own research if you're considering buying into it, but that's kind of my general thesis based on the price point right now.
Great. Okay. And you guys who are watching, there's 17 in the Q&A. Let us know if you have any specific questions about Equity Commonwealth. And Jack, I just wanted to hear a little bit more about your story. I know you're a YouTube creator as well. Just, let people know how you got started, what you're looking to build over there on your channel.
Absolutely. I guess I should introduce myself. My name's Jack Duffley. I'm a real estate investor and soon to be attorney. I actually just graduated law school last week, so that's fun. And I'll be taking the bar exam in February, and I'll be a real estate attorney in Chicago.
All right.
And then my YouTube channel in my spare time, that's increasingly getting smaller by the day, um, focuses also on personal finance, obviously mostly tailored towards real estate, but I do cover a fair amount of stocks and other personal financial topics. So I'd be very much happy if you check it out. I've been a fan of yours, Brad, and thank you very much for sharing your community with me.
Absolutely. I'm curious about your motivation to become an attorney. What's driving that?
That's a great question. So when I was in undergrad, I was kind of trying to figure out what career path I was trying to go for. I'd always been really good with history and when people have kind of an a-hole of a kid who likes to argue. Oh, you'd be a great lawyer. I was a little bit of that growing up. So I've always been a very critical thinker, and that's kind of one of my skill sets. So law seemed like a natural path. However, I came across real estate when I read Rich Dad Poor Dad and
Yeah.
started looking at the whole industry in a very different lens. I was like, oh, this is kind of cool. So I knew I wanted to get into real estate, but then I thought, what career would kind of be a nice way to learn more about the industry, build
Uh-huh.
some skills in it, and provide value that way. So becoming a real estate attorney seemed like the best match. I did end up getting a full ride to law school, which was a huge turning point towards, yes, go towards law, because limiting that downside risk, Um,
There you go.
so that was a big decision, and I talk about that on my channel as well too. If anyone happens to be interested in law school, I do talk about my experiences and decisions with that too.
Mhm.
So that's kind of the long-winded answer why I ended up with law. I also got a good opportunity at a large firm in Chicago that I'm very much looking forward to.
Awesome. Awesome. Well, we don't have too many questions rolling in here. As I was doing the research for what keywords to use for this video, there's not a whole lot of people who seem to be even aware of Equity Commonwealth. It really seems to
No,
be flying under the radar.
it does. It is a smaller company, obviously.
Yeah.
Sam Zell has other REITs as well. Like I said, that kind of takes some of the spotlight.
Yeah.
And he has his new SPAC too, which is taking more spotlight.
Right.
Well, I think it will start to get much more news if it starts making substantial moves, if we have
Right.
an eventual downturn in office or otherwise.
Right.
Because that's where he's made his bread and butter throughout his career.
Yep. Absolutely. Cool. Well, is there anything else you wanted to share about Equity Commonwealth, or anything else you wanted to throw into the ring here, Jack?
That's I think we covered just about everything.
Mm-hmm.
It's relatively straightforward in my view.
Yeah.
It depends on what you're going for with your portfolio, but it's not a particularly hard company to analyze. A lot of cash, a couple properties. Properties are doing fine, no debt, so your downside risk is pretty low. It's just whether you buy into their mission of trying to find undervalued or distressed properties that they can add value to. And there's always the chance that we don't get a downturn for another 5 years or even longer, depending on whatever happens with the market. You never know. So that's kind of what you're looking at with Equity Commonwealth, and we shall see what happens for sure. I'm very curious to see. So
Yeah, we certainly shall. It'll be interesting. I'm very curious how this winter is going to unfold. With the pandemic, with obviously a new president in office, it's there's just a lot of uncertainty.
yeah, there definitely is, and we'll see what states do as well. That's been a big sort of thorn in the side for a lot of larger office buildings, where states have issued stay-at-home orders and all that. And usually, one of the first things to go is driving into work. There's a lot of
Yeah.
state-to-state issues that will affect different office markets too. And for example, those office properties in Austin probably will continue to do well as more and more large firms move down to Austin. It seems like that's the new hot place to move to. I think
Yeah.
uh, Elon Musk wants to move towards Austin, and others. So we'll see how many follow suit. Every market is very localized when it comes to real estate. So that makes it very interesting to look at, since not every state is going to have the same sort of real estate characteristics. And it
That's
makes
right.
it very fun to dive into as well. For
Absolutely.
me, at least.
Yep. Tom is reminding me that it's summer, it's not winter, so we should be in the clear here with the pandemic.
Yeah, right. He's down under, so
He is. That's right.
he's enjoying it right now.
And then I just want to give a plug to Investing with Frank here. He had a question about, do you think the lack of capital allocation is a concern? I think Frank may be coming on a little later on here. We chatted a little bit about how, Sam Zell is very insistent on waiting for the right opportunity to come along, doesn't mind, waiting in cash. So it sounds like you're not very concerned about the lack of buying, Jack.
Not particularly.
Yeah.
However, if you're holding this stock for a long time and we get into year 3, 4 of no activity, you're going to be missing out on returns elsewhere. That's
Yeah.
the
Opportunity cost.
The opportunity cost exactly is probably your biggest risk factor here, because you never know when the market it will dip, and then they will allocate that capital. Because I am pretty confident that they will pull the trigger if they find a good deal.
Yeah. Okay. Great. Well, I think that's all we've got for today, guys. Thanks for tuning in, and be sure to give Jack a follow on his channel. He's
Thank you.
inching his way up to that magic 1,000 subscriber mark. So let's help him out.
It's been a fun last few months, just past 500. Now we're up to 550. So making progress.
There you go. All right. Sounds good. All right, guys. We'll see you in the next one. Take care.
Thanks again, Brad. Thanks, everyone.